Candle Range Theory Trader, back with you for another video, just showing you what to do when candle 3 does not behave or does something unexpected. So let's not waste time and get into it. This is a real trade that I took on yesterday for Aussie New Zealand. So this was the bias. Now remember, when it comes to trading the daily chart, how I like to do things is I like for candle 2 of the Candle Range Theory to create the high or low of the week. In this case, Thursday created the high of the week. So I had a short bias going into Friday. So I always draw my fib, and then, I look for fair value gaps to form. Makes it a little bigger below this line and above this line, which is the middle of candle 1's range. Okay. Because we have the candle range theory. This is the range that we're generally trading. So of course, our anticipation is for price to open, possibly have a slight retracement, and then pretty much fall the rest of the day. So now what I'm going to do is I'm going to show you what happened, trades that I may have taken, and then when to stop trading. That's the main thing, because I'll just show you. I'll show you better than I can explain it to you. So we'll drop down to the 5 minute, and we're on replay. So now we're going to go through Friday. I'm going to turn my fair value gaps on, and let's look for bearish fair value gaps that start with the day's open. Slow this down just a little bit so we can see. All right, so okay, there's the first one. All right, so let's say we take a short right here with a 1-to-1. Okay, so that's 20 pip stop loss, 20 pip take profit. Okay, I got another fair value gap. Okay, that looks good. Okay, let me make this a little skinnier. Okay, now the second fair value gap got taken. And then see that one gets taken as well. Okay, so at that point, you get out, right? So then you wait for the next bearish fair value gap. So let's see if we get one. Okay, so there we go. That looks like some good price action there. So I can take a short here, right near the daily open. That fits my criteria. I'm expecting, okay, we'll do a 20-20. Price may go to the downside. That makes it a little skinnier. Okay, there's the bearish fair value gap. That's exactly what I look for. Okay, below the candle range theory high, that black line. So let's keep going now. Okay, so the gap gets taken again. All right, so you stop yourself out so you don't lose all your risk. And then you just wait for the next one if it comes. Okay, so here we go. Good price action. This is about 11:50 or so at night. So then you could take another short position. Let's just say right here, 20-20. And then it's going to let this play. Now, right here. Okay, this is the most important part of the video. Okay, pay attention. This right here is not candle 3 behavior. Candle 3 ideally does not break out of the range. Let me go back out on the daily, and hopefully it doesn't screw it up too bad. I hope it doesn't. Yeah, there we go. Okay. Candle 3 should not break above candle 2's high. If it does that, the whole setup collapses. Okay. It is null and void. All right. So the main deal I want you to understand is that you have to understand, when price doesn't behave exactly like you anticipate it to, stop trading. This is not a candle 3. Candle 3 does not break above candle 2. You have to stick to that rule. Now, can you keep shorting if you want to? I mean, you can try, but see, what ends up happening sometimes is this may end up being candle 1, and this could be a new candle 2. And remember, candle 2's job, if you look at the deep study on candle 2's job is to consolidate and manipulate. Don't expect a big move on candle 2, because that's not how it acts. Big moves come on candle 3, not on candle 2. So real quick, I'll play the rest of this data just so you can see how it went. Real quick, so new highs of days being created. See how it's not coming back inside the range. Comes back down a little bit. Bounces off the daily. Keeps right on going. Bounce, bounce. And mainly just consolidates. This is at 755, 840. Now we're going to the New York session. And yeah, it comes down a little bit, and that's fine. But at the same time, though, this is not candle 3. This is the high of the day right here. Comes up. It just doesn't really offer much in the way of a straight up reversal. So let's go back out to the daily and see how it closed. And what do you know? It did nothing all day. It just spiked up a little bit, spiked down a little bit, and closed right where it opened. Okay, this is not a candle 3. Okay, it could be a candle 2. So going into next week, what I'm going to do, because now this is the high of the week. This was Friday's candle. I will reframe the candle range theory like this. And going into Monday, I still have a short bias on this because this looks like candle 2 behavior. But it's really about recognizing the behaviors of the pair. Okay, candle 1 just sets the range. Candle 2 is consolidation and manipulation. Candle 3 is expansion or distribution. Okay, if it's not acting the way it should, cut the trade. And I'm telling you, the last stop is the high of candle 2. All right, the high of candle 2. If candle 3, that's just a straight up CRT law. Candle 3 does not break candle 2, high or low. Okay, same thing in reverse if you're going long. All right, but if you see candle 3 tapping candle 2, scratch it, find something else. Okay, wait for the next candle close. All right, so hopefully that helps. Again, it's about recognizing behaviors more than anything else. This is not candle 3 behavior. Candle 3, just straight line. Okay, like even though this isn't a candle 3, but if you were long, this is a strong candle 3, something like this. Okay, something like that. And if you're short, like this would be a decent, not the strongest candle 3, but this is like candle 1, candle 2, candle 3 like this. And I'll move this over here so you can see that. That right there is candle 3 behavior because it opens and goes down. And see how it doesn't break above candle 2 here? Matter of fact, it wouldn't hurt to do a replay on this one real quick just to see it and compare. I'll just let it play. I'm not going to break the whole thing down. But you know what? Let me do this. All right, so there we go. Okay, so that's candle 2. Now let's compare how this one acts. This is a legit candle 3. So let's see how this acts. And let's see I'm going to turn the fair value gaps back on just so we can see it. And let this play. Okay, see how these gaps appear to be holding? But let's see if they hold. I don't know if that was the legit high of the day or not. All right, and then let's say we had a faux entry. Let's say like right here on a 2020. Look at that. That was a winning trade. See that? Okay, that's candle 3. That's candle 3. See that? Down to the middle. The other one I just showed you didn't even touch the middle of the range. I don't believe it did. Okay, even this fair value gap right here, I think this was another 2020. Candle 3 should give at least 2 one-to-one trades doing 20 pip stop loss, 20 pip take profits. That's one at about 8:10, and that's another one at 10:15, 10:10 p.m. Eastern Standard Time. That's a legit candle 3, right? If it's not doing this, you might be, either it's just going to keep going or you might be dealing with a candle 2 type situation, okay? But you got to know the behavior. All right, but that's enough of that. Hope you have got something out of this video. Don't forget to hit subscribe, hit the like button, leave a comment if you have any questions. I appreciate your time and attention. Have a great rest of your day. Take care.